All right, welcome to Talk Tickers. Today, we are diving deep into Planet's second quarter earnings report. And let me tell you, this was an absolute bombshell of a report, one that sent a real shockwave through the market. So we've got to unpack what happened. Let's get right into it.
38%. Just let that sink in. That was the jump in the stock in a single day after they released their numbers. A move like that, that's not just market noise. That is a massive signal that something fundamental, something big has changed in this company's story. Our job today is to figure out exactly what that is. So here's how we're going to break it down. First, we'll look at the headline numbers that lit the fuse on this rally. Then we're going to dig in and deconstruct why they beat expectations so badly. After that, we'll cover what management is saying, put it all into the competitive landscape, and then wrap it all up with our official take. The next call.
So what on earth drove that kind of surge? Well, it wasn't just one thing. This was a beat across the board. Planet just came out and crushed expectations, forcing Wall Street to completely reevaluate the company.
I mean, just look at the size of this outperformance. Revenue hit a record $73.4 million. That's over 10% higher than what analysts were expecting. But the bottom line? That's even more impressive. Their adjusted loss per share came in at just 3 cents. The street was looking for a 9-cent loss. I mean, they beat that by 2/3. This is the very definition of a high-quality earnings beat.
But, headline numbers are just part of the picture. The real question is, how did they pull this off? And when you really get under the hood and look at the data, it suggests this isn't just one good quarter. This looks like a genuine financial inflection point for the whole business. 516%. That is the year-over-year growth in what's called remaining performance obligations, or RPO. Now, if you're not familiar with that term, think of it this way. It's the total value of all the contracts they've already signed for future work. It is the best indicator of future growth you can find. In a number this big, it's just explosive. It shows just how much business Planet is already locked in. And that massive RPO growth feeds right into the company's total backlog, which is now sitting at over $736 million. And listen, this isn't just some theoretical pipeline. This is contracted, signed on the dotted line revenue. It gives them incredible visibility into the next couple of years. Basically, the growth story for fiscal 27 is already being written right now. And this chart shows you exactly where that growth is coming from. Yeah, total revenue grew a really healthy 20%. But look at the defense and intelligence sector. It accelerated to 41% year over year. This is their high-margin government business, and it is quickly becoming the absolute powerhouse for the entire company. And maybe the biggest news of all, Planet was free cash flow positive for the second quarter in a row. This is such a critical milestone. It's the moment a company officially goes from a cash-burning startup to a self-sustaining business. And management is now so confident, they think they'll be free cash flow positive for the entire year, a full year ahead of schedule. That's huge. Okay, so all this financial strength is obviously making management feel pretty good. The commentary on their earnings call was just incredibly bullish, and they backed it up with a whole string of massive new contracts and a raised forecast for the rest of the year. I mean, just look at this list of wins. A $250 million deal with the German government, a key investment from NATO, and they expanded their deals with both the National Reconnaissance Office and the U.S. Navy. We are talking about multi-year, mission-critical contracts with some of the most sophisticated customers in the world. So with all this momentum building, what does management do? They raise their full-year revenue guidance. This is one of the most powerful signals a leadership team can send. It says, hey, we're not just beating expectations now, we expect to keep beating them. And CEO Will Marshall really summed it all up perfectly on the call. He just said, our business is humming. That one quote tells you everything you need to know about how they're feeling inside the company right now. They see that massive backlog, and they know their future growth is already locked in. All right, so the company's firing on all cylinders. But let's zoom out a bit. To really understand where Planet is headed, you have to get what makes them unique in the market. And we also have to touch on the one piece of news that made some investors tap the brakes, even if just for a moment. Okay, so you really have to understand this. Planet's business model is just different. Most competitors, what they do is they get an order and they point a satellite at a specific target to get a high-res photo.
Planet does the opposite. They scan the entire landmass of the Earth every single day. What that does is create this unbelievably massive proprietary data set that their AI can then analyze. So it's not just an imaging company, it's a data and analytics company. Now, in the interest of a balanced view, we do have to mention the $300 million convertible notes offering they announced right after the rally. This is basically a type of financing. It's debt that can later be converted into company stock. And you saw the stock pull back just a little bit on this news because the market was pricing in the potential for what's called dilution, which just means more shares could be created down the road, making each existing share a slightly smaller piece of the pie. It's a short-term thing, but it's worth knowing about.
Okay, that brings us to the big finale, the next call. This is where we put all this data together into our official investment thesis, our prediction for the stock, and our equity research style rating. We've got a three-part call for you here. It all starts with our core thesis, which is that Planet has hit a clear inflection point. From there, we have a prediction for how the stock will likely behave. And those two things lead us right to our official rating, which really reflects our conviction in the long-term story. So here's our thesis, piece by piece. First, that record backlog completely de-risks their growth for at least the next 2 years. Second, that positive free cash flow proves the business is now self-sustaining. Third, this is all happening against a powerful tailwind of demand from the defense sector. And finally, their unique daily Scan plus AI model creates a competitive moat that is just incredibly difficult for anyone else to copy. So when you put all of that together, the combination of accelerating de-risked growth and a proven self-sustaining financial model, for us, the next call is crystal clear. We are rating shares of Planet as outperform. The market reacted to one fantastic quarter, but the real question now is, what happens when everyone else realizes this growth is already locked in for years to come?
And a quick reminder, this is not financial advice. All of our analysis is for informational purposes only.